man, CPI inflation just in, and it's bullish. Let's take a look exactly what just came out in the CPI data. We're already seeing markets pump here. Let me just take you over straight to the charts. You can see Bitcoin here moving through 83.9, trying to reclaim 84,000 on the foundation of some good CPI news. Let's take a look here at the numbers which have just come in. You can see it's 0.2% on the month over month. If we take a look at the charts here, I'm going to show you exactly what's happening. Markets were expecting 2.9 on the headline figure. That came in at 2.8% year over year, which is really good. If we take a look at the month over month, it was expected at around 0.3. That came in at 0.2. You may be saying that that's not a crazy movement. That's big, guys. It was 0.5% in the previous month in January, which annualized is huge. Right? That's a 6% annualized inflation. Now that that's come back to 0.2%, which is where we were August, September, October, which annualizes 2.4% inflation, that is good news. Remember, we want inflation down. We want Jerome Powell to have no excuse to keep rates higher for longer. We want him to start cutting. Right now, the market has not priced in any cuts. Right? The market is not pricing in any cuts, and they haven't for a while. Now, the question will be, will this start to change? Will we start to get more aggressive pricing in of rate cuts, maybe even by the May meeting or the June meeting? Again, it's going to depend on more data, right? Not just this one CPI reading, but this one CPI reading is good because it's showing that inflation is calling, and it will give the Fed some excuse, some remit to start cutting, which, by the way, Trump is going to want, right? Trump is going to get in Jerome Powell's ear and say, you better not mess this up. You better not mess this up. I don't want you with a hard landing. You need to get off the brakes, and you need to give us some easing of those interest rates. So hold up. Are you tired of worrying about the security of your cryptocurrency transactions? In this crazy world that is crypto, protecting and preserving our digital assets is everything. And for that reason, I partner with NordVPN, the best VPN service for crypto traders. With NordVPN, you can be sure that your online transactions are completely secure and your identity is hidden from prying eyes. Their military-grade encryption technology makes sure that no one can access your data, even on public Wi-Fi networks, so you can trade with complete peace of mind anywhere, anytime. Guys, seriously, don't risk your hard-earned crypto and NFTs for the price of a coffee each month. They've also offered a free month. Oh, and they've got a 30-day money-back guarantee. Guys, seriously, it's a small price to play for a rapid, safe VPN. Definitely check it out. Link is in the description. And let's get back into this video. Now, if we jump on over to the core inflation readings, right, taking out energy and food, the expected was 3.2. It came in at 3.1 here, which is good. Again, I mean, 3.1 is the lowest we've seen for a very long time. It's the lowest reading. I mean, we've had 3.2 a couple of times in the last 12 months, but we've not had 3.1 in the last year. So that's a really impressive core reading of 3.1. And if we look at the core month over month as well, that was expected to come in at 0.3, still a little bit high. That was expected to come in at 0.3. That came in at 0.2. So again, a big drop, right? 0.4 in the previous month, which was 4.8% annualized inflation. Now at 0.2, which is 2.4% annualized inflation. Remember, the Fed always talk about this 2% rate, right? Let's get closer to this 2% guiding principle. We're getting there. I mean, we're annualized, we're at a run rate of 2.4% on the core and on the headline inflation as well. And of course, we've got the 2.8 on the headline, which is starting to, come into track. Now, of course, going back to last September, we did get as low as 2.4, and then it kind of resurged. And this was ultimately the worry, right? We brought inflation down, and then it reared its head again. And the worry was that when it rears its head again, it goes back out of control, like we've seen in previous rate hiking cycles under Paul Volcker, etc. It's good to see that this is starting to curl over. Now, you're going to want more evidence of this, right? You're going to want the March reading to come in line as well, notch down a bit more, maybe 2.6, 2.4, just to show that inflation is under control. That's what the markets are going to want right now. Now, if we jump on over to the traditional markets just to see how they're reacting, again, this is breaking news. Trying to upload this as quickly as possible for you guys. If you appreciate that, smash up the likes. Do not forget to subscribe. And if you actively want to trade with me, you can do so in the Telegram group. So we're trading right now in the Telegram group, so make sure you join us. So if we look at the pre-market here, you can see a little bit of green here on the Dow, S&P 0.8%, nearly 1% on the NASDAQ opening up here as well. So this could be a good day here for US markets. Of course, just depends what Trump does, right? Does he come out with something to throw the market? But right now, so far, so good, right? Bitcoin trying to get back above 84, but there's still a lot of work to do, right? Look, the one inflation reading is good. we need to show more trending in that direction. We need more data to suggest that, we're getting a cooling off of the economy. We're not super hot. And when we get that type of data, we can start to now price in rate cuts. And that's ultimately the only thing that's going to move this market, right? You can get positive news around ETF. You can get positive news around a Bitcoin strategic reserve. Right now, the only thing really going to move this market with the force we want to get back up to 110 and beyond is liquidity. It's putting more money into people's pockets so they can go and buy crypto, right? It's loosening monetary policy. It's rotating risk on. And that's going to come through this, through good data pieces like this, showing that inflation is notching to the downside meaningfully. And that's a good sign, right? The fact that we've beat expectations on those numbers there is a good sign. I think markets should take nicely to that. So far, you are seeing some green candlestick action. If I jump down to the 5-minute chart, you can see it a bit more pronounced here. When the news came out, just there, that was the 5-minute candle. Then had some traders taking profit. But now we want to see over the next kind of couple of hours as the US market opens and kicks into gear, how does it perform? Can we start getting our way back towards 85 and reclaiming some of these key levels? I mean, particularly here, this kind of level at 83.7 has been a little bit of resistance here on Bitcoin. Now, if we jump on over to the 4-hourly chart, you guys know I love the 4-hourly chart because it does give you a good blend between long-term and short-term, right? So if we look at the 4-hourly chart, you can see exactly what's happening. We've moved into our EMA ribbon, and we're just trying to reclaim it, right? Now, of course, the bears are going to want to send us back in this direction. The bears are not going to want us to reclaim this EMA ribbon and bounce upwards, no. So this is going to be a key level here for us. This key level around that 85,000 mark, is going to be really, really important. This level here, really important that we can reclaim that on Bitcoin in the 4-hourly chart. That's going to set us up for a bigger bullish move. If we struggle and the bears just shrug off this good news and push us to the downside, that's not going to be good, okay? So important that you understand that from an inflation perspective. Now, we're seeing some of the fears. We spoke yesterday about Canada kind of U-turning on the electricity tariff. That stuff's going to continue, guys. Like I shared in yesterday's video, it's a dangerous market because news is moving this market very powerfully. So when you're in a situation where one tweet, one piece of news can affect your trades, you've got to be very careful, right? Make sure you're only trading with what you're willing to lose. Make sure that if you are trading, you're not doing so with leverage because this is a crazy volatile market. You're just going to get yourself wrecked. You need to be in spot positions where if you have an intraday spike because of a tweet or a piece of news, later on in the day when the markets recover, you weren't just sitting there with your stop loss being hit. Right? You don't want to be in that position. I've seen that happen time and time again. Is these wicking candles. I mean, you can see it even here on the 4-hourly charts. A lot of wicking candles here. These are taking out your stop losses, and these are getting you wrecked, right? So look at this day. This 4-hourly candle went as low as 76.5, and then recovered back to 79.4. So you would have got your stop loss here, and then only for your thesis to be right that the candlestick was going to be green. So it's important that you're not in leverage, you're in spot, just so you can make sure you can ride out those waves. It's really important that you're able to do so. So let's just see here now, how is the markets responding? Let's just see if we can jump on over to the NASDAQ chart. And you can see there's your green candlestick action on the NASDAQ chart on the 4-hourly. Again, it's going to take a couple of hours for the markets to digest this information, but the Nasdaq's got a long way to go, right? It's got to start moving back into its EMA ribbon in order to build some strength and change the trend. This has been a bearish trend over the last couple of days and weeks, and it's going to take a little bit to recover that. But I'm still bullish. I'm still bullish because the fact of the matter is, whether it's the tariff drama that's going on, whether it's the inflation, at some point inflation is going to come down. Right? And you can see it. It's starting to trend down. And what's going to happen? Central banks will start printing again, just like they've done time and time again. Do you think that's fundamentally going to change? I don't want to be in fiat currency, right? I don't want to. If I'm in fiat currency, I'm losing whatever it is, 5, 8, 10% purchasing power every single year because of inflation. If I'm in crypto and it can just hold even steady, that's going to be better than that, right? But we know that over time, over years, over cycles, crypto has done phenomenally well. So ultimately, I'm just being patient. The rate hiking cycle has come to an end. Now they're just sitting here. So if you draw a diagram, they rate hiked. They're now doing this for a bit. At some point, they're coming down, right? Every single time they've come down and even get into negative interest rates and start quantitative easing and printing. So if I endured all of this period here of the steepest rate hiking cycle we've ever seen, and I'm enduring this bit to the sideways, of course I'm going to enjoy the period where we come to the downside, and that's when the crazy wealth is going to be printed. And like I said time and time again, these cycles are just a process for transferring wealth. It transfers it from the impatient to the patient. That's all it does. And if you're patient and you can navigate these markets and you make sure you follow the boring rules of only investing what you're willing to lose and don't have leverage and don't have margin, it gives you staying power. It allows you to navigate the volatility and hold when others are panicking. Right? If you're in a position where you don't need to panic sell, and even better, you got some cash on the sidelines, that when Bitcoin dumps to 76, you're able to nibble a little bit. You're in a very strong position. You're hard to beat. Whereas the opposite person is somebody who's trading on margin. They don't even own the money they're trading with, right? They're using their next month's rent money to put into crypto, and therefore they need a return within the next 6.3 days, otherwise they're wrecked. They're then using leverage on top of that because they're so greedy that they want a 50x leverage trade as well because they want to get rich overnight. Then they're buying the tops. They're not even buying on pullbacks. They're buying the tops at 109. Then they're panic selling at 76 because their portfolio is down 30%. I mean, you're in a much better position than that type of guy, right? Just do not be that archetypical character. Those are the ones who get wrecked in crypto. Those are the ones who call it a scam and get disenchanted and leave. If you're here for the long run, be here for the long run. Understand the asset class. Learn to build wealth in the asset class. And if you want to learn more about that, jump on over to my second channel, which is just deep dives. It's me with my whiteboard, getting nerdy, getting geeky, and sharing all the alpha I've learned over the years in crypto. Make sure you go give a subscribe over there and drop me a comment and say hello as well. Thanks for watching, and I'll see you in the next one.